Well, a very warm welcome to all of you to our quarterly video. Today, we're going to look at two topics. We're going to look at the full year result for 2024, and then we'll turn our attention to the Capital Markets Day, which followed just a few days later. But before we begin, let's introduce and welcome our Deputy Group CEO, Mr. DK Agarwal. Sir, welcome.
Thank you, Stuart, for having me.
Well, just to kick off to the first one, which of course is the financial result for 2024, and that was a marked improvement on the year earlier. If I may, let me just read out the top line for viewers. So Indorama Ventures posted a full year EBITDA of $1.4 billion. That's a 26% year-on-year gain. On an adjusted basis, EBITDA climbed 10% to $1.5 billion. Now, how much of this result was because of tailwinds in the industry that benefited us versus our own management actions, particularly under IVL 2.0?
Yeah, Stuart, so I would say it's predominantly management actions. Let's understand that the chemical industry is passing through one of the toughest periods. A lot of overcapacity created in China, in the aromatic chain, in the olefin chain. The margins are record low, the industry has witnessed, and we see this in the results of many chemical countries around the world. We realized this in a year back when we deep dive into all the assets, and we took some very preemptive actions, and I am very happy that those actions were taken very timely, and that's what was pivoted as IVL 2.0. The rationalization of the assets went on track. It's not very easy to shut down the assets. We are on track for $160 to $180 million of fixed cost saving per annum. We realized in this year, in last year, 24, 48 million, because we shut down the assets at different times. So those will be realized 100 million incremental in 25. So I think this is the time to be fitter and fitter. What actions we are taking in going into the first quartile cost structure? Well, there has been some industry improvement after the end of destocking. So we saw improvement in Indonesia. Fiber business is going through a significant transformation in terms of management, in terms of rationalizing the assets. And we don't see any immediate improvement in the margins because of huge overhang of the capacity. And that's why it is important that we remain very agile and we keep our future results strictly based on management actions. And free cash flow is very important.
All right. Well, we are living in certainly unusual, if not interesting times, aren't we? I mean, we've had the quite prolonged global downturn now in chemical markets, and more recently, I suppose, we've had the second term of President Trump. How are those going to impact us in 2025?
This is a very, very interesting worldwide phenomena which is happening. Chemical industry is plagued with huge overcapacity, as I mentioned. China's domestic demand is not growing that much. They are having the housing problem. And then on top of it, this trade war which is happening. And you hear today that there is a duties, tomorrow you hear there is no duty. So it is creating a lot of uncertainty in the market. In IVL, as you know, our geographical distribution is the key, and the product diversification. Our 70% of our EBITDA earning comes from United States and Brazil and Mexico, which are very well protected market. We took very preemptive actions on Europe because we shut down the assets. We made losses, negative EBITDA in Europe in last year. We turned around this into positive EBITDA. So the Trump second term, if you ask, overall should be positive for IVL. Why? Because in PET business, there is a deficit of PET in the US market, 1 million ton. Even any trade barriers will further, improve the domestic competitiveness, even in the end product. Secondly, they are going to drill more gas. This means ethane gas advantage, shale gas advantage will be more. They are talking of corporate tax reduction, which will also help. Well, negative will be interest cost because it can be inflationary. And just the CPI data just came in, which was quite favorable yesterday. So let's keep the finger crossed, but the interest cost burden may be higher. If geopolitical tension eases out, that will certainly help Europe. I think he is very determined that Russia-Ukraine war stops. So these will be some positive news, but market is going to remain very volatile. And this is a time when you make your risk management very stronger.
A couple of questions ago, you did touch on IVL 2.0. If you don't mind me just digging a little bit further into some of the successes, you did talk as well about deleveraging and some further management actions towards that this year, 2025. What were the successes? Where are we at today, about a year into this program? It is a 3-year journey.
Oh, yeah, absolutely. I think it has been a very good progress, I would say. There were 4 pillars on the IVL 2.0. One was on the rationalization of high-cost assets and doing the fixed cost savings, so our operating rate goes up, which reduces the variable cost. We have made a good progress on this. Large assets in Europe, I think Rotterdam, we shut down, Canada we shut down, all this Australia we shut down, a plant in Indonesia. All that is translating. This, we are realizing that the property value will come out of that in north of $150 million, which will get realized in future. So that is going quite well. The fiber transportation is going well. The market growth, although we just had a volume growth of a couple of %, but I think we are protecting our end product market. So we'll continue to enhance our leadership position. The transformation program across digital is going ahead because it is deep rooted in the organization. When all the organization works towards fixed cost saving and the operation excellence, sales excellence, that trickles down a lot of money. We are targeting 2 subsidiaries to be IPO'd. We continue to work on it. We did make a minority equity investment, 24.9% in one of the Essel Packaging Limited. Will give us some flavor of Indian market. So things are progressing well on IVL 2.0. Deleveraging, we are targeting deleverage to debt to about $4.5 million by end of 26. I think our actions are all there in terms of raising, improving our free cash flow, raising equity. So IVL 2.0 is a good progress.
And is it time, or perhaps too early still in this journey, to start turning our attention once again back onto growth? Because at the end of the day, Indorama Ventures is a growth story and always will be. And if you think last week we had our capital markets day where we spoke to investors, and we usually use that opportunity to speak more broadly about strategy rather than dwelling on the full year results.
Yeah. So having completed first year of our 3-year journey of IVL 2.0, we felt that this was the very right steps which we took. We are happy with all the actions, but industry is still struggling. Our geographical diversification, product diversification is helping us. We did take further stock of our assets. We are looking at some more Asian assets if there is a single asset or so. We have to remain on the first quartile cost of structure. At the same time, we believe that today is an opportunity to create partnerships. And let me explain why partnership. Because all the entire industry is suffering from that downturn. And some of the companies are suffering even greater than, because their exposure to Asia or their exposure to certain markets which are not protected. And there is an opportunity to merge certain businesses, which creates a synergy value, which creates a more efficiency. And this is a time when such in the trough of the earning happens. And that's why we talked about Project Horizon there, which is exploring partnership. We talked about the portfolio investment, 24%, 0.9% in Essel Packaging. And third is Project Valor. So we want to go into growth journey. IVL is a growth stock. Valor is a petrochemical plant which we are exploring in India. It will be a state of art. We are changing from buying the assets which are legacy assets. You know how the IVL was built, buying the legacy assets, turning them around, and now we're going into a state of art plants in the markets which are deficit, which are high growth markets, and India is certainly next decade with all the mega trends will certainly have a lot of opportunity. So it's a preparation, not to see it idle. Make sure that you fix the core and prepare for growth.
Well, Mr. Agarwal, we've covered a lot of ground, haven't we? And so I look forward to meeting you here again in 3 months' time. But until then, good luck, and thank you for coming on.
Thank you very much. The world is very volatile, and we keep looking at it.